Welcome to QAV, TK. This is, I think, 815. It's the 15th of April, 2025. What a week, TK. What a week it has been for everybody, really. But let's talk about investors. What a fun week.
Yeah, well, it has been. At least we got some of our money back from the week before in the markets.
Yeah,
so that's good
for now.
Yeah, and I guess more of Trump's grand plan is being revealed, as we spoke about last week. The grift.
Well, we did call it the grift last week, and then he went on Truth Social and said now is a good time to buy, and 2 hours later they announced they were pausing the tariffs.
Yeah.
Like, you can't be much more blatant about the grift than he is being.
Sounds like the New York Stock Exchange is run by the ASX when it comes to corporate governance and disclosures. Yeah.
I mean, partly I don't think he thinks beyond 10 seconds ahead, so probably doesn't think about this is a crime, I shouldn't do it. But also, who's going to touch him right now? Like, he's already got all of the major law firms in the country that were supporting cases against him, running for their lives and paying $1 million donations to causes to try and stop him from doing whatever he has the power to do. He's got media companies bowing down, universities bowing down. Everyone's bowing down to the Führer right now out of fear for their lives and existence. So insider trading, add it to the list of things I don't care about this week.
Yeah, for someone who said he could walk out onto Fifth Avenue and shoot someone and get away with it, I don't think a little bit of disclosure, incorrect disclosure practices is going to worry him.
And that was before his first term. It's even... The cult of Trump is even stronger today than it was then. So for people who haven't been paying attention, let's catch you up on what's happened in the last week.
Do we have to?
What else are we going to talk about? What is there to talk about? There's nothing else to talk about.
I got a couple of things.
You said you had nothing.
I found something. When you started talking about Trump, I went, la, 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 la. Well, at least the almond farmers are happy, apparently. Have you heard about them? China's the biggest importer the biggest exporter into China of almonds comes from California, and they're now facing whatever it is, 95% tariffs, whatever China's charging.
125%.
125, is it? All right. And what time is it?
Yeah.
And so China's now starting to strike contracts with Australian growers to replace the Californian growers. So good on you, almond growers of Australia. You've come out in front.
It is your day. Your time has arrived.
Yeah, don't stuff it up.
Big Almond. Big Almond's been lobbying for this for decades. Big Almond. There's my episode title for this week. Big Almond. Oh, God. Yeah, so I guess, like, the big part of the story this week is obviously tariff, crazy levels of tariff. We talked about it last week, but then treasuries, US Treasuries, particularly the 10 and the 30 years, started to spike.
Yeah.
The 30-year nearly hit 5%. It was the biggest spike since 1987. And then all of a sudden, Trump paused the tariffs for 90 days. Whether he was intending to or not is hard to tell. His administration is giving lots of different messages. They're saying, it was all part of the strategy all along, even though he'd been saying and they'd been saying there aren't going to be any pauses. And then he himself said, the market was getting a bit yippy and queasy over the bond rate, so he decided to do it. So he says one thing, his administration says another thing. No one knows what's going on. It's a complete clown show over there. But there has been questions about who started selling their US Treasuries, and no one really knows. Apparently it takes some time for these things to get reported on, which seems strange to me, being 2025 in the world of digital tracking everything and AI, we aren't going to know. A bit like the dump of the JFK files. I did a bullshit filter episode about this a week or so ago. 80,000 JFK files were dumped, all PDFs, no index to them, and they're not searchable. You can't say, look up somebody's name and see which articles, which things meant. Nothing. Not searchable, no index. They're all just got long alphanumeric names. There's not, like what the hell is going on? 2025, you dump these things. They're not even searchable. That's insanity. Anyway, you can't see who's selling their bonds. So the theories are that it was China, the second largest. What?
You mean Xi? No, not what. Not who. Xi. not who's on first.
We're not doing Abbott and Costello.
Or George W. Who's on the phone? Exactly, Mr. President. Who? Who's on the phone? Who's on the phone, Mr. President?
Right. Is it a stand-up routine I missed somewhere along the way? Okay. So the theory at first and still is that some of it could have been China, just demonstrating that they have the US economy by the short and curlies. Yes, it'll cause them pain if they dump their treasuries, but are they willing to do that? Possibly. Who knows? I've been reading, as you know, lots of books on China and China's long-term strategy. I think I'm up to number 10 now. And, there is a very big school of thought that says China's been preparing for this. In fact, one of the books I'm reading, published by an American who's spent a lot of time over there, diplomat or something, was saying, this book came out in 2019. He said somewhere but in the middle of the 2020s was when it would come to a head and China would be ready to start to pull the rug out from underneath the US economy. And here we are, 2025.
Yeah, I remember reading articles back in the 90s, I think. Yeah, certainly a long time ago, 25 years ago, about this very fact when China started to buy bonds and US treasuries. A lot of economists pointed out that they could do great damage to the US economy, and it could be a long game on their part. If for nothing else, if they do decide to start selling in a controlled manner, it should drive the dollar down, the US dollar down, which makes their imports even more attractive to America. Now, that's before all the tariff discussion came along, but they were setting themselves up to control the market, really.
Well, they have been selling down for quite a few years now. They held 1.3 trillion in treasuries a few years ago. They're down now to like 780 billion. So they've been buying less, which is apparently puts pressure on treasuries as well when China's not in the market. But the other theories are that it's Japan who's the biggest holder of US treasuries. And then the other theory is that it's hedge funds. When the share market collapsed, they had to sell stuff to get some cash. So no one really seems to know. But the idea that I remember when Hillary Clinton was Secretary of State, she said it's hard to get tough with your banker or something like that about China.
Yeah, right.
Trump's starting to learn that.
Yeah.
Of course, it's only one of the things that they've done. And they are sounding like the big boy in the room. They're the adults in the room. They put their tariffs up to 125 and they said, look, we're not tit for tatting any higher than that really because it's meaningless at this point. If Trump wants to go higher, he can do that. We're just going to do other things like ban rare earth elements exports, et cetera, et cetera. And then Trump's already started to reverse that. He's created an exception for smartphones and consumer electronics and laptops and semiconductors, which I believe are about a quarter of China's exports to the US. He's already made exemptions on. They're still going to have a 20% tariff, but not the 145% tariff.
And largely, and who does that benefit? Well, the Mag 7 companies. Those are good of speculation behind that, yeah.
But also China. But really, it doesn't matter to China. I mean, a great deal. I believe the US is about 15% of China's exports goes to the US, but it's about 2% of the GDP.
Right.
And it's down from 3.5% of their GDP a few years ago. So China's been, doing their One Belt or Belt and Road or
Belt
One
and
Road or whatever the hell it's called these days.
Mm.
And bricks, they've been building bricks quietly behind the scenes. Well, not so quietly, but building it behind the scenes. So they've been diversifying their export markets. Again, like leading up to the day when they could see it coming, there was going to be a decoupling of the global free trade, WTO, blah-de-blah-de-blah. And they had to be positioned to see it out. Who can handle the most amount of pain for the longest is the big question here.
We've had 2 weeks of pain from Trump already, and that's enough, I think. So hopefully, China might be able to withstand it a lot longer than we can. But look, again, it comes back to investments. Yes, my portfolio goes up and down every day. I haven't traded yet during this whole process. I don't know if you've traded much in the dummy portfolio, but
couple of things.
Yeah, it's still business as usual, really, isn't it? It's always been.
Yes.
I mean, apart from things like dramatic rises in interest rates, which we had after COVID, I would say, and perhaps if there's tax changes that come in with a new government or after the election with the current government, the macro side of things is probably the least of our worries when we're investing in stocks on the share market. It's more about the individual companies and their numbers that's important, really.
Yeah.
Would have been nice to own an almond company this week, but
do we need a commodity? Is there an almond commodity price we need to look at?
Yeah, pork bellies or something.
By the way, I added those ones that you
steel
mentioned in the notes, like Biz, CTP, I think. And also I picked up IDA, which has been on the buy list the last couple of weeks as a gold miner, which I've added into our commodity lists.
Thank you.
Speaking of the portfolio, so the dummy portfolio was down 0.22% in the last week when I checked it this morning versus the benchmark, which was up 3.78. But for the financial year, we're up 9.5% per annum versus 4.34 per annum for the benchmark. I sold our parcel of PPM on the 9th of April and bought some HLS and some RMS to replace it.
You bought up. We put a red flag on RMS for disclosure. Remember, we had a whole episode about it. You convinced me.
I did, but then I forgot to put it in my notes. So. Shit. It's one of those things I've had on my to-do list this week was, what are those companies that have the red flags that I need to put in my notes? God damn it.
Yeah.
Hold on a second. Red flag note RMS. Can you remember what the other ones were?
Helia Group, not Helios, the mortgage lender.
It's HLI.
Yeah.
Okay.
I can't remember the other ones. They might have. FMG still has the red flag on it.
Yeah. Well, apart from that,
okay, happens to the best of us. Been a very distracting week.
And I was on holidays.
And you were on holidays, yeah. There you go.
Yeah. The US portfolio was up 3% this week and is up 16% for the financial year versus negative 2% for the S&P 500. And I'm sitting on a lot of cash that I couldn't invest last week when I ran a buy list. Actually, it was 2 weeks ago I ran the last US buy list. So I'm running another one this morning. Haven't quite finished doing it yet, but I'll probably get rid of that cash, seeing as most of the market up there has rebounded a bit in the next couple of days. Ray Dalio, Tony, says, don't make the mistake of thinking that's a hard sentence to read. Mm-hmm. Don't make the mistake of thinking that what's now happening is mostly about tariffs. It's mostly about Bitcoin. Didn't Ray tell us all to get into Bitcoin a couple of years ago?
Because his son told him to.
Yeah. To be fair, Bitcoin would have been a good investment when he said that.
For a little while. I don't think it's been doing well lately.
2 years ago, I was at 45,000. Now it's at 128,000. So,
yeah.
If it was 2 years ago, I don't know exactly when we did that story. But he wrote an article saying basically that the whole tariff thing with Trump is part of a bigger picture. He says we're witnessing the historic breakdown of the global monetary, political, and geopolitical order that, the US is drowning in debt. It's dependent on adversaries like China. I'm not convinced China's an adversary, but that's the way it's positioned, for goods and for credit. And the political system is fracturing under inequality and populist extremism on, he would say, both sides. I'm not sure if it's both sides, but there's certainly extreme beliefs on both sides. Both sides hate each other with a passion.
The culture wars.
And America's dominance is fading. It's being replaced by a raw power-based world. It's good Iggy Pop album, but I'm not sure if it's a good thing for America. You like that album, Raw Power? 1973.
Which track was on there? I don't recall. Raw Power.
Raw Power.
Okay. I don't know it.
All of it. It was produced by Bowie.
Okay.
And had a very clean. When Bowie did Transformer for Lou, and then he did Raw Power, and I think The Idiot for Iggy, did a couple of albums for Iggy. Sort of did a Berlin phase with Iggy as well, in the late 70s. And then Iggy engineered it 10 or 20 years ago, did like a harder, but it's a really great album.
Oh, I'll look it up. Thank you.
I am the world's forgotten boy, the one who's searching and destroy. Search and destroy. Anyway.
Okay.
Where was I going with that? Oh yeah.
The world's evolving to raw
the collapse of trust. But yeah, the big story in climate, he talks about climate shocks and AI is going to disrupt everything and robots are going to disrupt everything. He's predicting systemic collapse and transition, and talks about, if you go back into history, and this is what I've been banging on.
I think he was talking about systemic collapse. I read the article this morning.
No?
No.
Okay. What's your analysis of what he's saying then?
Well, what it reminded me of was, remember a long time ago now, I did a show on the Shell global planning system, where they do a long-range plan and they have 4 scenarios, and then they pick a scenario and they start to position the ship to sail in those waters. And their current thinking, and this is going back a few years, was that the world was going to decouple back into trading blocks, which is pretty much what's happening. It's China and the BRICS, it's the USA, it's Europe, whatever they finish up doing, et cetera, et cetera. So yes, if you mean the world is being blown up in terms of free trade, then yeah, it is. It's going back into where it was maybe, well, certainly before the Berlin Wall come down. It kind of reminds me of that time of shifting trading blocks and shifting alliances and shifting hegemonies. But I don't know if Dalio meant it, but I didn't read that he's talking about global breakdown. He's just saying, here's how you have to think about this and position yourself going forward.
He said the monetary economic order is breaking down. So that's a breakdown. He literally says it's breaking down. This sort of breakdown occurs only about once in a lifetime, but they have happened many times in history when similar unsustainable conditions were in place. He's saying we're seeing a classic breakdown of the major monetary, political, and geopolitical orders. So he's literally saying the system is breaking down, a systemic breakdown.
Yeah, okay. I'm not going to argue with you on that score. I think the system, as he describes it, can break down and we can still go on, trading with people, investing, having businesses that do well, et cetera, et cetera. So it's just I see it as a change in the hegemony, a change in the status quo, rather than, we're all going to go Mad Max next week. I think he's painting a very different picture.
I don't think he's saying it's going to be a dystopian collapse. Depending on what happens with climate change and AI and robots, we don't know. and all of the billionaires moving to their private
New Zealand.
security enclaves. No, Greenland.
Greenland,
And
okay.
yeah. Did I talk to you about Praxis last week? I think I did.
You did.
I've read about another one since then that they're working on, but anyway, that's another story. But like the big issue that seems to be, I think, the biggest thing that to me that happened in the last couple of weeks with the tariffs and the US Treasuries, all the stories that I'm reading are talking about the end of the US being seen as reliable,
Oh, definitely.
right?
Yeah.
People, including China, were buying US Treasuries because it was seen to be reliable. The country was always going to pay its debts. It was always going to be reasonably well managed, reasonably rational, and the global markets are going, oh, maybe not.
And the currency was going
anymore.
to be reasonably stable too. I mean, the US dollar has been called the world default currency. So I think that's been blown up in the last week as well.
Yeah. So that's going to bring about big changes to business and life as we know it, particularly for Americans.
Oh, maybe for Americans, yeah. But, you know, Trump will say it's all okay and they'll drink the Kool-Aid. They'll think it's fine. As we said off air. As we said off air before.
So, yeah. Are you watching The Studio yet?
Yeah.
You just mentioned Kool-Aid.
The current episode, yeah. Great.
Kool-Aid.
Yeah.
Yeah, I can't wait to see the Kool-Aid film. I want to see the Kool-Aid film. You saw the Zac Efron episode?
Yeah.
Is that the most recent one?
The Missing Reel.
How great was that?
It was good.
Where he's talking to his phone and doing like the film noir narrative when he's talking to his
with the trench coat and the hat on. Yeah. The fedora. Yeah.
So clever. Such a great show.
It is good.
So well executed. It's impressive. Yeah.
Yeah.
Anyway, what were you saying? Kool-Aid?
Well, I mean, as an aside, my social feeds have been full of clips of Americans confidently talking about how tariffs are good for them and how up until now the world's had a free ride on their back and it's going to change and blah, blah, blah. And usually they say it so confidently, they say it loudly, and you can see where they picked it up from, but it's 180 degrees wrong economically. And then you'll get an article, I don't know if you posted it or using one of my other forums, but there was a post saying there was a dairy farmer in one of the northern states in America who lived near the Canadian border, who had for years, decades, bought his feed for his cattle from Canada. And the latest truckload turned up and there was a tariff bill attached to the invoice of a couple of grand. And he's like scratching his head going, I thought the seller was supposed to pay this. I can't afford to pay this. and then whoever posted the article posts the same guy at a Trump rally with a MAGA hat on. So it's just like, they've drunk the Kool-Aid without knowing what they bought.
Well, the agricultural industry copped it pretty hard the first time around because of tariffs that Trump put on. You would have thought they would have learnt, but apparently not. Okay, so
I think
changes
Ray
happening
Dalio's
in the
right.
world.
There's going to be huge trading block shifts. The thing I liked about the article that he wrote, and I'm not necessarily a fan of Ray Dalio, I think he's he's good at
I have
marketing.
picked that up.
Yeah.
You've hinted at that over the years.
Most of the stuff he writes is very high level and is completely meaningless to my investing life. So nothing against Ray Dalio, but he's just, I might as well be listening to CNN or, John Stevens or something like that about the economy. But the thing I liked about what he wrote about was he kind of pulled the curtain back on what's been going on, a bit like you did before about China's the banker. They've been lending, by buying treasuries, they're lending America the money to come and buy Chinese goods. So there's been that cycle of debt and purchase in the world. And that's what's, it couldn't go on forever and it's starting to break down now. That's what
that leads me to an article. It's an article in the Fin from April 10th. Battle-hardened China can survive Trump's trade war, ex-envoy. Quoting Jeff Raby, unfortunate name, Canberra's chief envoy to Beijing between 2007 and 2011, said more fiscal pump priming and monetary easing would ease the pain for the Chinese economy as President Xi Jinping and his lieutenants used global outrage at Trump's trade war to foster closer trade relations with developing and advanced economies. Trump has put the global economy teetering on the edge of the recession, and there's no doubt that's going to damage China's domestic growth, Raby told the Australian Financial Review. But China has laid the groundwork for a diversified trade base. They do business with every other country in the world, and even with this tariff pause, Trump has just broken trust with almost all of them. He says the world still believes that China makes T-shirts and socks, but the real growth areas of their economy are in advanced technology like electric vehicles and complex hardware. China will be hit like the whole world will be hit, but it has spent years building resilience into the economy. This is enormously irritating to them, but they can survive it.
Yeah, well, I think they can. I think both countries can, quite frankly. There might be dislocation, there might be job loss, there might be people who hurt and come out bad from all this, but short of them going to war against each other physically, it's a shifting of the pieces, I think. And the other thing that we haven't talked about is what happens to interest rates. If as once the situation sort of becomes a bit clearer, and there's no more 90-day pauses on what the tariffs are going to be, et cetera, and we might know what stimulus China's giving their economy, there might be a reduction in interest rates in the US, which will have another leg up on the stock market, most likely. So it's very much a situation that's in play.
Because tariffs will cause inflation to go up,
Correct.
And so they'll reduce interest rates to try and...
As Trump says, America has a trade deficit. He's just made that, in some cases, 150% worse than what it is now. Of course, it's going to be inflationary.
Before his reversal last week, I was reading analysis saying he was a genius because I think we talked about this on the episode last week. He was going to raise tariffs, which means people were going to buy less, which meant somehow that the interest rates were going to go down and they'd be able to refinance their debt at cheaper rates. But then the treasuries went up, which meant it was going to cost them more to refinance their debt. And it's sort of the whole thing about, he's such a financial genius story disappeared.
I think to give him his due, this, apart from, I think, being a grift, is one way of dealing with all the free trade anomalies that have been going on in the world. Australia's traditional approach to it is to go and negotiate and spend years and years and years dotting the I's and crossing the T's about, you'll reduce your tariff on this and we'll reduce our tariff on that, and you'll gain access to your country to sell this and you'll gain access to do that. Trump's just gone, I'm going to tax you all and then come and talk to me, and we'll, if we do a deal, I can take the tariff away. That's one way of doing it. It's not the way you treat friends, but that's the Trump way of doing it. And it's a quick way of doing it too.
It's also a quick way of completely destroying global trust in the US government and reliance on the US economy.
I have getting back to investing in companies, I had an update on the Accent Group that we talked about a little bit recently. So they have done a strategic alliance with the Frasers Group. The House of Fraser is a department store in the UK, and there's been a market release today about that. So AX1, which is on our buy list, issued some shares at the price of $1.72, which is a slight discount to their closing price yesterday. And there's issuing those to fund the initial rollout of the Sports Direct business, which is the business that the Frasers Group owns and wants to start in Australia, and is seeing Accent One as a channel for doing that. Accent One is a shoe store retailer with a number of different brands. One of them, of course, being selling sporting shoes. So It makes kind of sense that they have expertise in this area. So just letting people know that they are now issuing some shares. So it's on the buy list. If you're going to think about buying, do some research and take it into account that there's an issuance going on, and maybe have a look at what they're saying about the future. A couple of highlights is the CEO said that it could be about a 6-year rollout, so we may not see the benefits of the Sports Direct business to the bottom line of Accent Group for a while, because obviously they've got to find the stores, they've got to set them up, they've got to set up the supply chains, etc., etc. It'll take time. Even though Sports Direct operates online now, they don't operate in the retail space. And the CEO of the Accent Group has said he'll stay around for at least the first half of that, so for 3 years to bed that down as much as possible. They're thinking of rolling out 50 Sports Direct stores over the next 6 years. Sports Direct own brands such as Everlast, Lonsdale and Slazenger, as well as all the other major brands that they'll stock in the store. So, we might see some different brands on our retail landscape. And it'll be interesting to see how this rollout goes against Rebel Sport, which is also another business that's been on the buy list for a long time, super retail group, which I own shares in. They're the dominant player. So sometimes a new brand rolling out 50 stores can heavily discount their product and take market share quickly, and sometimes they get swamped by the incumbents. So it'll be interesting to see what happens as they roll the stores out. Watch the space.
Well, I've got some news stories that came up in my news run today. Findi, our good friends at Findi, have put out another announcement that they have completed the $30 million acquisition of Bankit in a strategic expansion. I think we talked about this a while ago as possibly happening, but that's been completed through its majority-owned subsidiary Transaction Solutions International. Today announced the successful completion of its acquisition of Bankit Services for $30 million. The acquisition, first announced in January 2025, is a critical part of Findi's strategic roadmap to scale its presence in India's fast-evolving digital financial services landscape. So congratulations to Findi. Share price has been not doing too bad. It jumped up when this came out on the 9th of April from $3.80 to $4.28. Come back a little bit since then, but that was a big announcement for them. Congratulations if you hold Findi, which I think I do. Do I have Findi still? Findi.
I think so. You had it for a long time and did well out of it, but I don't think it's ever gone back below its sell price, has it?
Yeah, let's try to look. Findi, no. Yeah, it's up 27% since I added it a year ago, May last year. Would have thought it would have done a lot better. It's like 1,000% at some stage, but there you go. It's had a topsy-turvy year. Still 30% a year, not too bad. CCG, Comms Group. Have we ever talked about them, Tony?
No, I don't think so. No.
They came up, they must be somewhere on our list. They came up as a press release. A leading global provider of cloud communications and secure workplace solutions announced a record-breaking revenue performance for March 2025. Record-breaking. It's pretty not often that you have revenue that's record-breaking. Do you think they'll end up in the Guinness Book of Records, Tony, for record-breaking revenue?
I don't think so, no. The share price is up a lot,
Really?
17% today.
Good for them.
Yeah.
I'll see if they've ever been on a buy list. Why are they on my list of things?
I don't recognise them.
That's historical buy lists. CCG. Oh, there you go. Yeah. A month or so ago.
Okay.
They were on our buy list. And, So February. They were on our buy list. Probably around about, the time this was ramping up, March 2025, they've announced this was records. Who else? Perenti. You asked me for a while back about notifications of buybacks.
Mm-hmm.
You still tracking those?
Yeah. Perenti doing a buyback.
Perenti has announced.
Good.
Yeah, Perenti have announced a buyback. That was yesterday. And Telstra have announced a buyback.
Okay. I own shares in
add those.
Perenti just to disclose that. But it's good to hear they're doing a buyback.
Yeah, shares in Telstra?
No.
Okay. Yeah, I have Perenti in my super too. It's up 6%. So there's that. Okay, well, that's all I've got on my list of news articles.
Well, I have an announcement that's just come through. I've been sitting here waiting to see if it did. It's at the ASX now. But yesterday I was appointed to the board of an ASX company. And I was waiting to let the market announcement come through before I told you. For full disclosure.
Well, I could have. Should I have bought or sold before this announcement came out?
I don't know. I haven't checked the share price today.
I'm asking what you think the announcement will do to the share price.
No, I don't know.
Will it go up or will it go down?
I don't think anyone will notice, to be honest.
Which company?
Company is called Clime Investment Wealth, CIW. So
I've heard of those.
Yeah, listeners who've been around for a long time will recognise Clime as being the home of Roger Montgomery back in the day. It's a value investing company, and John Abernethy, who's still the chair and one of the cornerstone investors, has been around for a long time in the value investing market as well, is the chair. So yes, they extended an invitation for me to join, and I had my first meeting yesterday.
What's the share price?
Oh, I don't know. 33 cents. CIW, yeah.
CIW. No, it's gone down.
Oh, good.
Well, there you go. From 40 cents in February down to 33 cents today.
Yeah, it was around 33, I think, yesterday. It's been going down since all the market ruction started. And it's a sell, so this is in no way any sort of indication for people to buy into the company. But interesting to me. Alex Hay, my stockbroker, has been trying to get me onto a fund manager's board for a while now, and this one's come through. So I've been meeting with them for a while, since last year, and very pleased to be involved with them. One of the doyens of value investing in Australia.
Yeah. Congratulations to them and to you.
Yeah, thank you.
It's very exciting.
Yeah. So we may have someone on the show. I'll talk to them about whether they can provide someone to come and talk about value investing with us and their take on what's going on in the market. Because they also run US funds, international funds, bond funds, private credit, that kind of thing as well. So they're on top of it.
Right. And is Roger still involved?
No, he left a long time ago when he set up his own fund. Yeah.
Yeah, right.
Yep. But he was there. He may have been just their CIO. I think he was also their MD for quite a while. And it's had a bit of a storied career in the last sort of 8 to 10 years. They acquired a financial planner with the thought that they would provide the funds that would be given to the clients of the financial planner. It didn't quite work out that way, and they exited the business, and they're just kind of putting things back into place as a value investor since the exit of that business last year. So there's been a few turbulent years for past ownership, but back in the hands of John Abernethy as chair, and very much in the school of value investing again.
So what do you think your role is going to be? What do you hope to bring to the table in this sort of a role?
Yeah, it's an interesting one. They were on the lookout for an independent director. They had one. There's one other independent director on there who's a tax specialist, but they wanted someone with corporate experience, because a lot of the work in their near-term runway is to look at acquiring some of the businesses that are coming up, fund management businesses coming up on the market almost every day at the moment. Since the tariffs have come in, there's a lot of people who are saying this is just getting too hard and they're going to throw it in. And they're putting their businesses up for sale. So there's a lot of acquisition going on in the space. Obviously, I think we can do something with them and they can do something with us. If it's just as simple as cross-promotion, or, they get access to some of the stuff we talk about and market, and we get access to some of the stuff that they talk about and market, that might be helpful, especially on the US side of things. But at this stage, it's all I'm there to do is to be an independent director, to represent the small shareholders, and to provide some corporate experience to their discussions around their future.
Well, very exciting.
Yeah, it is. It is very exciting, actually. They've got a good team there at the moment who's really shaking things up, which is great.
Well, I'm tempted to. I had stuff back to the US about the moron premium, but we don't have time to do that because you've got a pulled pork to do.
I do, yes. And we have any questions, or was that the question to do a pulled pork?
The question was from Trent, will you do a pulled pork on CWP?
Yes, thanks, Trent. And thanks, Trent, because I had this half prepared about a month ago during results season, and we got bumped for other more headline-worthy results. But this was a good result for Cedar Woods Property. It's on the buy list. It's what they do is in the name. It's a property developer who comes out of WA. It's been going for quite a while now, about 30 years. And they've now sort of over time come into the other parts of Australia, not just the Perth market. So WA is still, I think, about half their business, but they've diversified into other states as well. Listed back in 1994 and was established in 1987. What else can I say about them? Stock price went up following its results announcement last month because they were good results, but has drifted lower recently with all the things going on in the world with share market movements. Massive increase in revenue and profit this half due to a large number of settlements in FY25 versus FY24. And they have the pipeline in place that appears to support this trend to continue. So in the half results, revenue was up 59% and NPAT was up nearly 600%. So big Guinness Book record-breaking results for
record-breaking
to see the Woods Property Group. But yeah, no, good numbers. Record pre-sales, which is one of the important things because that helps fund their developments. Record pre-sales of $640 million as at 31st of December 2024 versus $525 million in the prior period, which is up 22%. So it's all going well for them. A lot of tailwinds in this space at the moment. Even though they're very diversified and play across all areas of property development and all areas of price points, they do have a skew towards first home buyers with house and land packages, with sublot developments on the fringes of urban areas, and with building apartments and townhouses. And there is a shortage in that market ever since probably the last 2 or 3 years since COVID. And that's partly been because it's difficult. There's been less builders in the market, less labour in the market, and also the rise in price. But there's generally depending on who you listen to, a couple of 100,000 house shortfalls in the supply to meet demand in that kind of market. So that's not going to go away soon, and that's shoring up their business to continue doing well over the next couple of years. They are guiding full year NPAT growth of at least 10% for FY25. So that's a good thing. And they're also saying with further profit growth anticipated in FY26. So they're certainly seeing no abatement in this imbalance between supply and demand in the markets they operate in. They're calling out that in most of the states they work in, demand is strong. They're seeing a bit of weakness in Victoria. With the state of the property market there, and the economy in general in Victoria is a bit weak compared to the rest of the country. So being a developer with geographic spread is helping them. They currently have 37 projects under development around Australia. So they're about a 400 million market cap. So they've grown a lot since I own these shares a long time ago. I haven't bought them more recently, but I found them of interest a number of years ago, and they were much smaller back then. So they've been growing well. What else can I say about them? They have nearly 10,000 lots to support future earnings. They're in townhouses, apartments, retirement villages, some commercial. So yeah, right across the waterfront, really, in the property space. One of the things that interested me in what they were doing was they're keeping debt under control, which is good, but they're still getting some growth. And one of the ways they've been able to do that is to partner with large companies and pension funds from overseas. So they call it out as a strategy that they're prioritizing, and currently they have some partnerships in place. One with QIC, which is I think it's the Queensland Investment Commission. So large sort of Queensland investment partner there, and the other one is Tokyo Gas Real Estate. Again, another large Japanese investment company in real estate, and they're doing 50-50 joint ventures with them, which enables them to tackle some really big developments, but not have to take on a lot of debt to be able to do that on their own. So it's interesting sort of play, I thought. The other interesting thing I came across on their website is that they offer a shareholder discount. So eligible shareholders may receive 5% discount on land and 2.5% discount on houses, townhouses, apartments, and commercial units and Cedar Woods projects, generally for holding 1,000 shares for 6 months. So if you are in the market as a first home buyer in particular, but I guess any home buyer, you might want to investigate holding some shares for 6 months and getting a discount on one of their offerings. Good company on the QAV numbers front. They're on the buy list. Stock price for this analysis is $5.11, which is less than the consensus target, above IV1 of $3.21, but less than IV2 of $5.30. Stock Doctor financial health and trend is strong and steady. Stockopedia rank it very highly on the quality side of things, F score of 8 out of 9, and a quality ranking score of 90 out of their list of 100. So that's pretty good. Overall ranking in Stockopedia is 95, and it's probably depressed because they've had some fallback in their share price. So they have a low momentum score of 66 in Stockopedia. So they're basically a Josephine on our list as well. But that comes off the big stock price appreciation following their results announcement. So they have had some strength up until recently. Yield is currently 5.27%, which is less than our cutoff, which is around 6.1%, but it's still a reasonable yield. Net equity per share is $5.60, so we can buy this company at less than book value and also less than net tangible assets. So that's a good thing. On the manually entered data front, PE is just over 8 times, which is the lowest in 3 years. Prop cap is 6.25 times, which is very low. What else? On the manually entered side of things, it has an owner-founder. So a chap by the name of William Hames is a co-founder of Cedar Woods, and by trade is an architect and town planner. Had worked in the US property development market before returning to Australia in 1975 and establishing a company called Hames Charlie Australia, an architectural and town planning consulting company. So the founder's still on the board, still has a cornerstone investment, been around for a long time, which is important in this game because property developers are cyclical businesses. And we score it as having a 1 for an owner-founder. They also have the chair of the company as a substantial shareholder, a guy called Robert Brown. But he joined the board early on, not quite when they first started. So he's not really a founder, even though he's been there for a long time. I think since about 1990. Together they hold nearly a quarter of the stock. So we give it a big tick for that. It doesn't have consistently increasing equity. What else can I say? PropCap 6.25 I've mentioned. Stock Doctor reports negative forecast earnings per share growth, which seemed to me to contradict what the company CEO said in the results announcement, where he forecasted 10% earnings per share growth. So I can't quite understand why Stock Doctor is saying that. If we put the negative earnings per share forecast growth over the PE ratio, we get a negative, so we give it a -1. So this company's share price, QAV score may actually increase. I think Stock Doctor may change that negative forecast for earnings per share growth with time. And it could just be that there's not many brokers following this company, so someone might get around to updating their forecasts and having it feed into the data sometime soon. So that's that. The QAV all-up score, quality is 13 out of 16, which is 81%, and the QAV score of 0.13. Again, a little bit depressed by that negative earnings per share forecast, and that may actually rise to a bit higher. So towards the bottom of our buy list, but still pretty solid, especially on the quality side of things. The risks and positives for this company, it is in a sweet spot for what it's doing now. As I said before, as of the weekend, both political parties are falling over themselves to help first home buyers. If either side is either elected or re-elected, there's going to be even more demand in that market, which will help a company like this. So I see that they're going to do well after the election. And look, what I've seen over the years is that whenever a government does something to help buyers into a market, whatever discount is going or whatever help is going to the home buyer, it ends up in the developer's pocket. Now, I remember back in the days when Jeff Kennett came in and to try and revitalise the building of apartments, he removed stamp duty off new dwellings for a period. And I remember thinking, that's great, because I was in the market for a house back in the 80s and went along to see if I liked the offerings, and basically all the prices had been raised by the amount of the stamp duty discount. So that was pretty evident when you compare them to existing apartments in the market. That may happen again, probably will, in which case Cedar Woods benefits. But property developers do have their risks, even though this one's well managed and has been around for a long time. If there is a general downturn in the economy, if interest rates, if bonds go down and their interest rates go up, those two things will impact negatively. If there are more labour shortages and they struggle to complete contracts, etc., that may have impacts on them. If material costs increase because of tariffs or whatever, somehow that might flow into our market as a cost increase. That will have an impact on them. But I think, given where things are, I think the balance of probabilities is they're going to have tailwinds for a couple of years in this space. My gut feel is if things get out of hand in the US, i.e. there's a recession, that interest rates will come down. There's a bit of pressure on the RBA now to reduce interest rates. Personally, I think they're holding off while the election takes place. And there's a board meeting about a week after the election, which may be their first sort of clear air to drop interest rates without favouring one side of politics over the other during an election campaign. But if there are interest rate cuts, which the market suspects there will be, then that will help Cedar Woods Property as well. So good on you, Trent, for calling this one out. I think it's probably in a sweet spot, and it's got a bit of runway to go to come. So have a look at CWP.
But it's currently a Josephine.
Yeah. And to be fair, I think most stocks are a Josephine now, aren't they? There's been a lot of downturn in the share market in the last week or so, even though it's turned up again. They haven't quite gotten back to where they were.
Yeah. I was buying stuff yesterday, and it was hard finding stuff that was available, but not impossible. All right. Thank you, Tony. That brings us to After Hours. What have you been watching?
Well, apart from the studio, you put me onto Black Mirror, and I did get a reference for one of the episodes. Have you seen USS Callister, one of the Black Mirror episodes?
Classic. Yeah, that's from a couple of seasons ago.
Yeah, and I just released a follow-up to it in this current season as well.
Oh,
yeah.
Right.
Yeah.
I haven't seen the current season. Taylor called me from LA this morning, said he watched one episode that was pretty good, but yeah. They're usually good. Like Black Mirror rarely misses.
Right.
The episodes are usually very well crafted.
Anyway, so my first sort of toe dip in Black Mirror was really good. So thanks for that.
You haven't seen the rest of it?
I've seen individual episodes, and sometimes I sort of don't get into them and turn them off, but that one was a great one. But really loving,
there you go.
Really loving Mobland. Have you caught up with that yet?
No. Tell me about that again. What's that?
It's the latest directorial effort from Guy Ritchie. And
right.
And I haven't really liked his last couple. The one about the origins of the SAS, I think, was terrible and paled in comparison to the SBS Rogue Heroes series. But this one's fantastic. It stars Tom Hardy, who plays the kind of enforcer for the mob in London. Stars Pierce Brosnan as the Irish mob boss, and what's her name as the wife? I've forgotten her name now. From The Cook, the wife, the Cook, the thief, the wife, and his lover. Helen Mirren. Thank you. I knew it would come to me after a while.
Wow.
So great cast.
Dame Helen Mirren.
Strong plot. Really good. But
film or series?
Series. And it's releasing every week. So the first 3 are out at the moment on Paramount Plus, I think, unfortunately. So you've got to subscribe to see it. But yeah, well worth a subscription, at least until the series finishes. And the thing I liked about it was I didn't even pick up it was a Ritchie project, because he's kind of almost been a self-parody of himself in the last kind of efforts where everything's kind of cartoony, violency and flashy and stylized, and I haven't quite taken to it. But this one's gritty, and Tom Hardy's just down in there, knows everyone, knows how to make things happen, knows who to call, cops on the tape, nurses in emergency rooms, just kind of prowling through London, solving problems. It's fantastic.
Did you watch The Gentleman, the series?
Gentleman was good, which was probably not as good as the movie, but the series wasn't bad, but still getting into that kind of cartoony, over-the-top sort of style.
It was a bit over the top. Yeah, I enjoyed it, though.
Yeah, it was good. But this is different. This is back to being gritty, well acted. Yeah.
Lock, stock.
Yeah.
Well, I will check that out when I get a Paramount subscription again one day. I just got a binge subscription again after not having one for a long time to watch the latest seasons of The Righteous Gemstones, which have just landed, and White Lotus. New season of that is out, which stars Walton Goggins, who I'm a big fan of.
He was in one of the seasons of White Lotus, wasn't he?
No, he's in Righteous Gemstones.
Yeah, I thought he was also in White Lotus.
Well, this new season. Yeah, I thought you said one of the other seasons. Yeah, he's in this season of White Lotus. Yeah. Playing 2 completely different characters. Couldn't be further apart.
Baby Billy Bob or something in the Righteous Gemstones.
Yeah. Baby Billy. Baby Billy's Bible Bonkers. Come on now. When that last season came out with that was our catchphrase in this house for ages. Come on now. Come on now. That's what he says all the time. Come on now. Yeah, no, I love a bit of White Lotus, full of horrible rich people. But great cast as always. They've got what's her face? Parker Posey.
Right.
One of the rich wives who turns up, and she's doing some crazy accent from, I don't know, somewhere deep south. Chrissy said it sounds like her stepmother. Not stepmother. Yes, stepmother. She's got this real sort of drawling southern accent, and Walton Goggins, of course. He plays a seedy sort of character in it. Anyway,
and John Goodman. Don't forget Mr. Goodman. He's in it too, isn't he?
I'm talking about White Lotus.
Oh, sorry. I thought you were talking about The Righteous Gemstones. Okay.
Oh, have you seen any of the latest season of The Righteous Gemstones?
No, I've just seen the shorts and clips.
Goodman's retired to Florida. He's living on a boat in Florida. He's got long hair. He's gone all Margaritaville, sleeping with dirty hoes and just drinking and fishing on his boat off the Florida Keys or something. It's pretty funny. What else have I
That
got
sounds
for
like the
you?
Florida
Paul
Keys.
Pork was.
Different world down there.
Oh,
The
did you
Republic
watch
of Florida Keys?
Did you watch the Nick Cave
Yes, thank
concert
you.
I sent you?
Yeah, very good.
How great
Yeah,
was
it was
that?
great.
Speaking of homeless men, Warren Ellis looks more and more like a guy sleeping under a bridge every year.
Yeah, I'm sure I could have walked past him in King's Cross when I was living there, and yeah, look the other way. Mm.
But he's so great. He's playing some little Casio keyboard for the first couple of tracks, and then he pulls the violin out and does some big screeching solo, and yeah, just great. And Nick, I was talking to my mate Michael Seward's, guy who runs whatever the bus company is down in Melbourne now.
Was Skybus.
Owns all the bus things.
Yeah.
Was that? Yeah, they've changed their name. But I was talking to him the other day about just how, we've been fans of Nick Cave since, I don't know, in my case, probably the early 90s, I guess I got into Nick Cave, Red Right Hand and all those sorts of things. But how he's sort of become this like religious icon now in his concerts. It's this amazing transformation from, I don't know, Boys Next Door or Birthday Party or whatever to from some dangerous druggy punk to some religious like icon where he's up on stage. It's almost like a religious revival kind of thing.
Especially in that clip you sent me with the big projector at the back, with some of the lyrics about God being played.
Yeah, from Wild God. And he's got like his backup singers are dressed like a gospel choir and he's like doing the full thing. It's fantastic. He's done really well.
But yeah, I mean, one of the first film clips I recorded on VHS when I got a video recorder was The Boys Next Door. Yeah. That, what was it called? Not Suicide, but the other one, the instrumental with the sax was fantastic. Yeah. And then went to see the Birthday Party, which was out there. Very different sort of experience.
Oh, wow.
Yeah, amazing concert. And then to see what he's become, it's great, really. I mean, the quality of the music now is fantastic. Yeah.
He's sort of turned himself into some sort of combination of Johnny Cash and Leonard Cohen and I don't know who else I'd throw in there, but it's tremendous. Funny because then I put on Dumb and Dumber yesterday. I was trying to get Fox to watch Dumb and Dumber with me. Couldn't get him to sit down.
You didn't have enough
to
of
watch it,
Trump and JD or Trump and Elon?
Yeah, that is the Dumb and Dumber routine. But at one point, Red Right Hand comes on. Jim Carrey's walking down the street and they're using Red Right Hand as the backing track for it, which I was like, wow, I didn't really surprised that the Farrelly brothers would have known who Nick Cave was in 1994 or whenever that came out. So they were obviously somebody, or their music director had their finger on the pulse of what was cool in the early 90s.
What did Fox think of it?
He didn't sit around. He was more interested in watching, I don't know, Minecraft YouTubes or something. I don't know. Well, that's all I got for you, TK, this week, I think. I've got to go. I've got a Kung Fu class to get to.
Sounds good.
Oh, you got a horse that retired, you had in your notes.
Yeah,
Perfect.
so I had Perfect and Double Market both ran on the weekend and did horribly bad. We've since found Double Market has pulled up with a hamstring problem, so we understand that was why she didn't perform. So she's out for probably a couple of months at least. And will come back as a 4-year-old probably in the spring. And Perfect is now going to go to the sales and be sold as a broodmare in May in Sydney. So I'll be heading up there to go to the sale. Sell a horse.
Have a board meeting. You going to Sydney for all your board meetings?
We had one in Melbourne yesterday, and I will get up to Sydney at some stage for some, but we'll do some by Microsoft Teams as well. Interesting company. Yeah, they're all over Australia. So the MD's in Adelaide and their chairs in Sydney and the CIO's in Melbourne. So they're used to either or flying in or doing it online.
All right. Well, very good. Well, thank you, TK. Thanks for turning up and for reminding me that I should care less about macroeconomics.
Yes.
I've spent so much time over the last week trying to understand what's going on. I come on and you just go, who cares?
Well, I think it's always good to know what's going on. It's very hard to know what's going on. I don't even think economists fully understand it because there's so many levers and pulleys and moving parts. That's why I've just learned to focus on my portfolio and focus on the buy list.
Focus on what's real.
What you can control. Yeah.
Nothing. Not even the atoms coming from this universe, you told me off air.
Well, they're real.
Oh, okay.
One of the
But the idea that they came from this universe is the bit you don't believe.
Well, one of the great questions in physics is if you live in a universe where matter can't be created, how did the universe come into existence? I can't answer that. That's for a different podcast.
You need more weed to do that podcast. All right,
Okay,
buddy.
thanks
you. Have a good week.
Thanks.